Okay, so let's make a full analysis on CAD CHF. So let's start from the monthly time frame. What kind of situation do we have on the monthly? Now, on the monthly time frame, clearly we have a market that has now approached this previous support, which is now turned resistance from a monthly perspective, creating also this impulse correction pattern. After an impulse and a correction, what do you expect? You expect the market to at least try to make another impulse to the downside. So at least from here, you expect the market to try to make a first start of a wave to the downside. Now, if you want to measure a retracement in the market, what are you supposed to be doing? Taking the Fibonacci on the impulse. So if we want to measure this retracement, what are we supposed to be doing is taking our Fibonacci from the high to the low of the impulse. And what we can clearly see is that the market has already retraced to the 0.618 Fibonacci retracement, aka the golden ratio, which is lining up perfectly with this previous support, turn resistance, creating a confluence of resistance exactly at this area. So let's keep only the 0.618. Let's keep only the structure level from a monthly perspective to keep our charts as clean as possible. And let's drop down on the weekly time frame. So on the weekly time frame already, we have more or less exactly what we already had from a monthly perspective. We know that here we have clear structure resistance. We know that the market can make a spike to test this high here because this is exactly the previous support turn resistance from a weekly perspective. So we know that the market might make a spike to the upside before starting the wave to the downside, so we can be prepared also for that. What we also can notice is that this explosion to the upside was simply a wick filling of this candle here. I made a YouTube video about this candle. Every time you see it, you can definitely expect most of the times the next candle to fill in the wick. And in fact, what we did with students after we had that situation, simply here from a daily perspective, we had the previous resistance. Okay, resistance here, turn support at this area, and we definitely wanted to take a long position because from a 4-hour perspective, we got everything satisfied for a nice long position. In fact, we were able to capitalize on a nice 3.5 risk to reward to the upside here on CAD CHF on the bounce away from this previous daily resistance or support to fill in the wick on the weekly and complete this impulse correction and impulse pattern to the upside. Now, currently, we are in the daily time frame. We know that here we have monthly resistance. We know that here we have the weekly resistance, which the market might go and hit. And there is also another thing that we have to take from this analysis. From a daily perspective, we have also daily structure here. So now you have everything that you need because you know that you have strong monthly resistance here. You know that the market might make a spike higher, but anyway, since you know that you have daily previous resistance here, now turn support here, you cannot be looking for any shorting until this level will hold as support. So you can just be approaching the situation in a reactive way as every single time. And I will now show you exactly how you can do it. But first, let's go and take a quick check at what we have from a COT perspective. So commitment of traders. What big banks and institutions are currently doing from a CAD perspective and what they're doing from a CHF perspective. So how they are positioned. So what we can see if we check the COT data for the CAD, we can see that we went from having 14K net positions to having minus 33K net positions, meaning that we went from having way more longs than shorts from an institutional perspective on the CAD to having way more shorts than longs. And overall, we can definitely expect the CAD weakness that we have from a monthly perspective continue. So as we said, the monthly time frame to try to start a new impulse to the downside. And if we go and see what we have from a CHF perspective, we can see that currently we are sitting at 8.9K net positions from the minus 3K that we had, meaning that currently we have way more longs than shorts. And also with the last report, hedge funds have added another 118 longs and close 132 shorts. So going back to the chart, we can definitely expect the weakness. However, as usual, we have to be reactive in the market and not predictive. At the moment, this level is strong support. Until it will be holding a support, we will not be looking for any shorts with students unless we will see the spike obviously to this level here. Then from here, yes, we will be looking for potential shorts. But anyway, if the market will manage to break above this area, I will make an update. But what kind of situation we need to wait for? If the market will manage to break back below this structure, then this previous resistance, which is strong support here, after the market will break it to the downside, it will be turned again resistance. And that is exactly what we will be waiting for, because at that point, we will have the monthly time frame, which is bearish. We will have the weekly time frame, which is bearish. And we will have the daily time frame, which is as well bearish. And after the break and retest of this daily structure, we will be monitoring price action from a 4-hour perspective with students inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for a move to the downside. We will also have the possibility to complete this impulse correction and impulse pattern to the downside and the creation of this head and shoulders. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.